Welcome to Savvy Business, Life Unscripted, with your host, Christina Rivera, where our guests share their wisdom and valuable business tips, empowering our audience to expand their personal potential.
Hi, Christopher H. Volk. Welcome to Savvy Broadcasting, Life Unscripted. I'm so grateful to have you here this wonderful Saturday afternoon. We're here to chat about your latest book, The Value Equation, a business guide to wealth creation for entrepreneurs, leaders, and investors. Very important. There's many business owners who have either been in business for a while, but maybe need to generate more capital, or you're just getting started, and what's the best way to do that? And you have all of that information in your wonderful book. But we're going to share some of the details. We don't want to give them too much information because we want them to go out there and get the book. But welcome to the show.
Well, it's great to be here, Christina. I'm thrilled to be interviewed by you.
You betcha. I'm very grateful to have you here today. Before we go into all your yummy details, just share a little of your backstory. What brought you to where you are today?
Sure. I started my life in banking, and then did that for 6 years. And I was in Virginia in college and went to Atlanta for banking, and then I came out to Arizona with one of my customers. And that customer got involved in buying real estate. And what they would do is buy real estate for chain restaurant properties at the time. This is 1980s. Restaurants were growing really fast. And so they'd buy a lot of chain restaurants and just own the real estate and rent it back to people. And we raised money from Wall Street firms to do this. And then in 1994, I led taking that company public, and I eventually became president of that company. And we sold that to GE. So I was a part of GE for a bit, and we sold that, and we listed that on the New York Stock Exchange. And then later on, I started a third company with some other folks, and I ran it as CEO, the founding CEO, for 10 years, and stepped down at the end of last year. So, and that company is Store Capital. It's on the New York Stock Exchange, and it's owns a lot of real estate that's rented to people that use it for their business.
That's awesome. And you know what? I'm seeing this beautiful piece behind you. It looks like something my grandma would have owned. It's a fabulous piece. It reminds me of bankers. My grandma actually worked in a bank.
Yeah, so the piece behind me is a Wooten Desk. It was made in Indiana by the Wooten Desk company, and there were a bunch of them. And Thomas Edison had one, Queen Victoria had one. So I mean, it was kind of the business person's thing to have at the turn of the 20th century. So I've had this one most of my working career, and then I've got another one in a house we have in Alabama too. So I got two of them.
It's amazing. It's amazing. It truly is. And perfect for the banking man that you are. But you also created the value equation, which is what your book is based on. How did you come to creating that equation? And what is it?
Yeah. So basically, as a banker, you're trying to understand businesses. And one of the things that you understand pretty early on, if you're a banker, is some businesses are just better than other businesses. I mean, and that should be intuitive to people, perhaps, but you're trying to figure out why are some businesses better than other businesses. And so I, in my career, just modeled out a lot of businesses, and I would take spreadsheets and create huge financial models. A lot of them pretty complicated. And ultimately, I decided that I could actually simplify a lot of this stuff. And so I started taking models and with the goal of making them easier and easier and easier to do. And ultimately, I came down to just 6 variables in a model. I mean, basically, you could throw away the spreadsheet. You could make an equation. And I did this in 1999, and I wrote a book. I wrote a magazine article on it, and that was in a magazine called Strategic Finance, and it won their award that year for the best article submission. But after that, I started just writing more and more articles, and ultimately, I ended up doing a video series at the company that I helped start most recently, and led up until the end of last year. And so. And as I did this, someone approached me and said, you should write a book. So that was probably about 5 years ago. It took me 2 years to sort of think about it, and then it took me 2 years to write it and to edit it. And so what's coming out is a book that's designed to make business simple. A lot of times people overcomplicate business, and they talk about absolute numbers. And the thing that's cool about the equation, it's a relative equation. So it's based upon percentages, and it's based upon universal business truths. And so it focuses on just 6 variables, and 3 of them are super important. The other 3 are kind of important. And if you want to sort of blow up the equation, you can make it into 30 variables or more if you want to. And the book walks you through it, and then it walks you through why, all the six variables, and then what it takes to sort of make the variables better, for your business. And the idea behind all of this is to try to make a business worth more than it costs. And this sounds sort of pretty basic, but most businesses actually don't ever get to that level. Like most companies in the world don't ever get to be worth more than they cost. But if you look at the folks at the top of the Forbes 400 or something like that, the richest people in the world, and really pretty much the richest people ever, they've all pretty much created businesses, and they've created businesses that are worth more than they cost. And when you do that, you're creating wealth. The wealth just appears from thin air. And so the idea is to show you how not just to sort of accumulate wealth, but to create wealth. And by doing that with these six variables, you can look at it, and it's something I've worked on for the last 25 years. And you could buy a book and you can learn it all in about a day. It took me 25 years to figure it out.
Well, what's amazing, I used to watch Shark Tank a lot, and a lot of times they would get very, very deep with the business owners in front of them saying, okay, what is your business worth? What orders do you have? What's your in and out, finance wise? And a lot of times they were basing it, the owners, the business owners, on feeling, oh yeah, it's $2 million. Well, how many orders do you have? And and really they would have almost no orders, or they really wouldn't be worth what they thought the company was valued at, but more truly about a feeling. And so I'm glad that you created this book so they can get really deep on what is truly the value of where you stand today, and how could you build it, where when you say cost versus the wealth, you're talking about that what you spend to keep your business operating, you want to be able to actually have more stored instead of more just going out for expenses or whatever, correct?
Well, sort of. Really, what you're talking about is every person who starts a business. They don't have to be accountants, they don't have to be math wizards, but they sure all know what they've invested, and so they know what they've got in their checking account. They know what the office furniture costs. They know what the store costs. Whatever it is they have, they know what all this costs, and then they know what they're having to borrow if they're using other people's money to borrow. In the case of myself. They wouldn't even borrow from us. We would just buy the real estate for them and rent it to them. So it was another way for them to own or finance the real estate that they had. So they're looking for how to finance the business. And what they're trying to figure out is, how do I put up $100,000, let's say, to start up a business? And how do I have that equity be worth more than $100,000? I mean, how can I create wealth? And creating wealth is different in a way than just accumulating wealth. So, for example, most companies in the world are never really worth more than they cost. I mean, you put up the $100,000, maybe you're lucky to sell the business for $100,000. In the meantime, you're going to make some money. You could save some money. You could invest in the stock market. You could do really well. But the people that are the most successful in business are the people that actually can achieve something that's much harder, which is to make that $100,000 business investment they made worth more than $100,000. And you do that by generating returns that are higher than people expect. And so if you're if you're the folks at Alphabet and you're Sergey Brin or Larry Page, and you started off, the returns that company has made just boggle the minds. I mean, and allowed people to not just accumulate wealth, but just to sort of create wealth. And oftentimes, the wealth that gets created is so huge, it just falls off on other people. So you'll see multiple people in the Forbes 400 coming from the same source of wealth, and that happens all the time. And so, at a much more basic level, though, most successful companies do this. And so the question is, how do you do it? And what are the variables to decide whether you're doing it? And if you could do that, then what you could do is you could take a very simple 6-variable equation, and you can calculate how to value a business. How much other people's money should you use? What's the total expected rate of return? I mean, you can back into a lot of stuff from just those 6 variables that make business much more easy to understand and accessible for the average person.
I love that. I remember both Mr. Wonderful from Shark Tank and talking about how he sends his dollars out as soldiers to go out and get more dollars. And you're like, what? What does that mean? But the same goes with Donald Trump had mentioned getting a loan to start up his company. And people were like, well, if I got a loan like that and I had rich parents, I would have been totally successful. I'm like, not unless you what does he call, like 1,000 exit. So to take that money, that million, and make it, a billion, 9 billion, or 10 million is vastly different than, at the end of the day, as you said, I'm now worth the exact amount of money that I got from my loan, invested a million, I've got a million. It's like, no, how do you actually get that to grow for you?
Right. And I think, as you're talking about some of these fancy people, a lot of times people we tend to celebrate the richest people. So they're in the Forbes 400. We see them on television, but they're extreme outliers. For most of us, our choices are pretty basic. I mean, you can own a big piece of a small pie or a small piece of a big pie. A lot of the people in the Forbes 400 own a big piece of a big pie, which is very hard to do. So one of the things that I also want to do in the book too, towards the end, is to sort of describe to people what a financial win really is. Because you want to, if somebody ends up being worth $5 million, they're not going to end up with a private jet, and they're not going to have an island, but they will have been more successful than most anybody in the United States. And that's important for people to put that in perspective.
Yeah, I like that you say that, because most people, most business owners don't make it past 5-year mark. So you're not talking about just let's just do well and making multi-millions of dollars. How do we just stay in business? Because most businesses aren't even making it and staying profitable where they can keep going past the 5-year mark. And with your principles, they can learn to do that. Now, what do you think? Why aren't we taught this in school? Because most of wealth creation, understanding real finances, isn't taught anywhere, even in college. Really?
It's not taught in business school. I mean, I went through years of business school, and I got out without really understanding how wealth was created. If you go and look for books on how to get rich, there are tons of them. But the thing is, the richest people in the world all made their money in business. And so then the question is, well, how do businesses create wealth? Because it's a different issue. And I'm not aware of any book on it. So this could be the first one. And so as I wrote it, I had a lot of people help me and proof it, and shareholders of our company, and people that analyze our business. And I'm pleased to introduce it. It'll be interesting to see how it's received. And the concepts in it are novel. They are not taught in business school classrooms, but they should be.
They should be. Yeah, absolutely. Now, also, you talk in your book about using other people's money. I've heard other people say, I got to get an investor for this, or a bank to give me a loan. When's a good time to use other people's money, and when isn't it a good time? Should every business go and try to find investors, angel investors? What's your take?
Well, first of all, every business out there is going to use other people's money to start off with. Most people don't have much of their own money when they start a business. I mean, they're low. They have a good idea. Even better, they might have a really good management team. So they've got a good idea and a good management team. And so the question is, how to scrape together the money you need. And part of it is to try to minimize. You start off with how much you can borrow, and you back into how much you have to put up with equity. So, and when I say borrow, I'm really talking about other people's money. So, for example, you could have an airline. They could lease an airplane, or they could buy the airplane, right? In both cases, it's other people's money. Somebody's lending you the money, or in another case, somebody's buying your aircraft and just renting it to you. And but the amount of money being used for the aircraft is the same, whether it's being borrowed or not. What is different is if you borrow for, let's say you're a restaurant operator, if you borrow money for your restaurant location, you're going to have to put up a fair amount of equity in the real estate, because no bank's going to give you a 100% loan. Whereas if you rent it from a landlord, you may end up being better off, because the landlord will put up all the money, right? And so you're deciding how you want to put up your balance sheet. You start off with OPM, other people's money, because it's not just borrowing, it's also leasing, and then you back into how much equity do you have to have. And early on, people might have to go to friends and family. They'll cobble together what they can. If they're buying a business, they'll be having somebody carry back a seller note, maybe. And then if they have to go to other investors, you can do that. And that's what you see on Shark Tank, where people go in and they're pitching. And I have the story in there about Scrub Daddy, which is one of the better Shark Tank investments made over the years. And basically, he I think gave away 20% of his company for something like $750,000, and it had no revenue at the time. So it was something where there was a certain amount of feel to it, but he did have orders, and he had the ability to sell sponges and whatnot. So you start off with things like that. And the idea with people is to try, if you're getting investors, to try to raise as much money as you can without giving away too much of the company, and that's always the trick. And the people that are really successful in companies tend to figure out how to keep as much of the business as they can and give away as little as they can.
I love that. And I know a gal who was very smart about that. She went to friends, family, other business owners and asked for basically a loan, but said that in 5 years, I will give you the loan back plus 5% interest. And I will work hours in 10 jobs if I have to. And she held to her word and paid everyone back in 5 years and owed nothing and didn't have to give any part of the company, and now she's in business 10 years. So for her, it worked out quite well. It was a great idea. I also like the fact that you mentioned renting. I think people don't realize that sometimes you don't need to go out there, get a huge loan from a bank and pay it back for the next billion years. You could, rent it. Renting's a great option. All of the costs, like even renting an apartment, on the landlord to cover and take care of the property and not you. Because when you do get like an empty space, which I don't think people realize, I just started looking at commercial space for Savvy, and you just get a block and a wall and you got to do everything inside of that commercial space. It's all on you.
Right. Exactly. Yeah. So I spent the better part of my career doing mortgages and leases, and I did more leases than mortgages. And we would own lots of real estate, and we'd rent it to veterinary clinics, restaurants, fitness clubs, early childhood education locations, you name it, manufacturing companies, who basically ended up being better off with a landlord than a banker. And so we were just a form of OPM for them. And the book will go into OPM a lot, and it goes into what's called the capital stack, which is the mix of OPM and equity that it takes to put together a business.
That's great. Well, where do they get their copy? It's coming out in a month, but I think they can pre-order off of Amazon and other such booksellers, correct?
They can. So the book is on Amazon today for pre-order, and they can also get it from the Wiley website and pre-order it from the Wiley website as well. And it's coming out on May 10th.
Yes. And I see here there is a website called are you going to have a website for the book directly or not really?
Yeah, so I will have a website. It'll be www.thevalueequation.com. That is not up just yet, but it will be. And it will have added materials and added spreadsheets and added support for people. And I will be posting to it from time to time, sure.
Well, this is great. So get the book today, everyone. So you're up on it. You can start reading it today. Then when the book comes out in a month, in May, then you can go to thevalueequation.com and get all the background spreadsheets and all the yummy extra details that Mr. Christopher H. Volk has there for you. I just have to thank you again for coming to Savvy Broadcasting and sharing your great brilliance today. Thank you.
Well, Christina, it was delightful. Thank you so much for having me.
You betcha.
Like, subscribe, and share this episode. To listen to more Savvy episodes and Savvy Biz Tips, go to www.lifeunscriptedradio.com. To find out about our paid sponsorship opportunities or how to become a guest, email Christina at lifeunscriptedradio.com.